Sandip Sabharwal joining us on the show. Very good afternoon to you, Sandip. And how should one read into this? Because we have a truncated week back here. When we come on Monday, we have no idea what sort of news flow we will be actually dealing with. For now, do you think we should take one day at a time?
So truncated weeks are suiting us these days because the day when the market actually crashed, we were shut in many of the world markets. So I think the truncated weeks are not bad, but I think nevertheless, I think it was very clear that there was excessive bearishness and markets will rally. When markets start rallying, sometimes the pace of the rally is very tough to predict. So, so, like in a bearish phase, sometimes how much the market falls, it's very tough to predict that you think it could fall till this time, this much, but it falls much more. Similarly, on the bullish side, the same thing happens. I think several macro indicators are quite positive for India, like the inflation coming down, the monetary policy, the sharp pickup in government expenditure, and the expected pickup in private consumption as the tax breaks which were given in the current budget kick in from this month and people have more disposable income. So I think things are fine for India. I don't macro wise. I've been saying this for some time that there's excessive bearishness and market should do well.
Well, 1900 now in HDFC Bank. Who would have thought 3 years back, pretty much same time around, when the merger got announced and the way the stock tanked after that, it tested many a patience, for a better part. And I think the move in HDFC Bank, Kunal, has begun really 6 months to 1 year back?
Yeah, almost one and a half odd year. To be precise, I think Jan 2024 is where the stock bottomed out. That was at 1350, 1400 for HDFC Bank. And that was the point where the stock, ended that 2 years or 3 years of a sideways or a very tight kind of a range for itself. And from that low, the stock has not, breached that low ever since, Jan 2024. And from there, we're now almost at 1900 plus mark.
Oh, yeah, absolutely. Look at the 6-month graph. I think that's going to give you a better picture. I mean, not to say that HDFC Bank has not fallen when the market fell. You can see those jagged edges. But yeah, elongated over a period of 3 years, it's risen pretty much one way up from those 1300 levels all the way to 1900 and who knows, maybe even 2000 on HDFC Bank. Look at the strength in names like Bharti. It's already at 1880. I mean, it's pretty much one of those leadership names, hasn't fallen at all in the market fall since October of last year. And it's still going strong there, another 3.5% of a move up. And then, of course, there are those creme names like ICICI Bank still going strong. A good 3.5% move up is what you're seeing on ICICI Bank as well. Sandip, I don't think one ever doubted that ICICI Bank and HDFC Bank or even Kotak for that matter, and I recall that you were pretty correct in actually calling a bottom on Kotak when you said that you are going to be beginning to buy into the stock, and then you of course over time added positions there. But how do you broaden now your presence within banks? Do you stay put with these names? Do you add on to these, or do you actually look for bottom up stories within banks?
Banks is one segment, Aisha, where I always say that stick to the leaders if you are going into banks. So I think the larger banks itself, like you said, ICICI, Axis, HDFC, Kotak, SBI. So I think these are enough banks. Why do you want to go down further into smaller and smaller banks? If you want to take some risk in NBFCs, go to higher quality. In financial, go to higher quality NBFCs, which have relatively lower risk profile. And because of the fact that in a declining interest rate scenario, typically NBFCs tend to also outperform banks. So I think right now it's a large cap move. So I think as the large caps move up, stabilize, we might see some NBFCs on the mid cap side also participate.
Let's see the leadership within NBFCs then, and let's bring up the charts for Chola, for Shriram Finance, for a Bajaj Finance. But Kunal, to be fair, and I'm just picking up the top rung from within NBFCs, they too have moved up, right?
Yeah, they too have moved up, but in that order, I think Bajaj Finance is the only one which has actually made a new high or crossed the previous 2023-24 highs. Chola Finance as well as Shriram Finance, these stocks have yet to make a comeback or at least break past about their previous highs. And that's where I believe that the markets are, because we were initially at a point where the choice between the sectors was very limited towards few stocks which were doing pretty well. Now that the markets out, the risk on appetite has come back again, the markets would start to open up. There would be a lot more underperforming names or the tier 2 performing stocks which could make a comeback for themselves. I think in that aspect, there could be a very strong trade, which could happen into the second rung names. And I think in that sense, Shriram Finance, Chola Finance, L&T Finance, many of these stocks, I think they can make a very strong comeback.
Sandeep, would you want to name some of the NBFCs where you still think there's value on the table?
I think L&T Finance is something which we hold. It didn't fall in the entire crash, and I think it's pretty well placed. It's not very expensive. M&M Finance, the reported numbers on a quarterly basis in terms of growth were not great, so the stock corrected. But I think given the agri outlook and the rural outlook, it was also further reasonably placed. We also talked about some other NBFCs like Chola, etc. They should also do well. And Manappuram is again where the private equity players have come in. The stock's pretty cheap in terms of price to book or the dividend yield. So my guess is as the new management gets in and the new structure takes place, it sets it on a good long-term platform.
Just request you to get your AirPods on while I'm just going to chat with Kunal on that. Kunal, well, Sandeep believes that you got to stick with the large cap quality names within banks. But as a trading move, can you buy some of those bottom up stories within banks?
Yeah, I think there's a strong case that now what happens in every kind of a sector move. Initially, you have large cap names, the performing stocks which lead the charts, they move up higher. They move with a buffer of say 10-15% higher than the other underperforming names. But then comes a point when the risk on appetite comes back. That's where the underperforming stocks, they usually make a very strong comeback, and these underperforming stocks usually come out from the mid cap or the tier 2 category on the large cap names. So I believe in that sense there could be a very strong case which could now be built into many of the underperforming names. For example, you have Axis Bank, a stock which has been underperformer from the private sector banking name. That stock, I believe, even further can make a strong comeback. IndusInd Bank has already done pretty well over the last 1 month or so, 2-3 weeks, where it's recovered from 600, 620 levels to now almost on the verge of breaking that 800 mark. Then there are the other underperforming stocks on the PSU banking name. I think SBI is still yet to break past about the 200-day moving average, and that too at a point where HDFC Bank and other names are almost 10-15% higher than the long-term moving averages. So eventually that catch-up will happen in these underperforming stocks. So I think that's a space where traders could look at momentum as well as alpha generation.
Right, so that's the take coming in on the financial space, the entire BFSI space, and how that sort of space is looking like at this point in time. But Kunal, if you look at the charts today, you've seen a stellar recovery coming in from the IT sector. And also, let's not forget that also I think IT sector is also feeling FOMO given the fact that the rest of the market is moving up. But there's a lot of play for the IT sector. Today you have Infosys number, you had Wipro that actually weighed heavy, and because of Wipro you had the mid-tier companies also actually decline. What's your take now on the IT space? How should you see it on the charts? How is it looking? Do you see that sort of a resistance coming in?
So, it's completely contrary to what it was for banking stocks. Last 2-3 months back, there was positive news for banking stocks and you saw the prices moving up higher. The news flow is very negative for the IT stocks and the prices are at a very attractive levels. Now, there would be a point where, say, over the next 2-3 weeks, there would be an increased amount of volatility into these stock prices, where the news flow may continue to be, say, negative or a bit more volatile or uncertain, and the prices would try to fluctuate. But these are opportunities for long-term investors to try and look at these price points or these oversold nature of indicators, because when the market gets into a skewed kind of an uptrend, there hardly is a point where an underperforming sector, large cap sector, in the sense like IT, metals, etc., they would remain underperformers for a prolonged period of time. So I think it's a matter of time that these stocks could make a strong comeback. I believe that volatility or dips into these stocks, even from current levels, should be taken as a good opportunity for long term.
I don't know if we can bring up the Nifty contributors list or not. Do we have that provision? Because today, of course, ICICI Bank, HDFC Bank are big contributors to today's move. But look at a Reliance as well. While it's still languishing at that 1270 odd level, and it's been a tough resistance for that particular stock at this level, but 3% higher, so it's a very solid move. And I'm sure that today's FII buy figure is going to be a significant one, because the kind of movers that you have today, it's clearly smacking off FII buying. If you were to pick up the trend for the last couple of trading sessions as well, wherein DIIs have been seller, it's been the FII buying, wherein the quantum has been much higher, and you can tell with the names that are actually moving up in the market. But look at a Zomato, or shall I say Eternal, that stock also higher by 233 is where that stock is. It's a solid 5.25% move that you're currently seeing on that stock. Sandip is back with us. Sandip, we were just discussing IT, whether now you think the bad news is in the price, the stocks have fallen a good 30 to 35 odd percent, or does it even make sense? There are many opportunities in the markets have corrected a fair lot, so why look at IT? What camp are you in?
So I think today, if you're looking for a contrarian bet, I think it's better to maybe go into some consumer names or some beaten down infrastructure, construction kind of companies, which will benefit from the monetary policy becoming more supportive and government expenditure actually taking off. So IT will bottom out sometime over the next couple of months, I think, because many of the large IT companies are still strong cash generators with zero debt. So at some stage they'll bottom, but I think there's still a lot of uncertainty. There are still talks of a lot of project cancellations, deferrals, etc. So which might not go out so fast. So my guess is that maybe around the next quarterly results, if the stocks, if the markets, let's say, do well, these stocks don't participate or fall a bit further, that's the time we could look at them as a contrarian bet.
Right. Let's take a look at exactly what the real estate pack is doing at this point in time, given the fact that the real estate space has been on a tear of late, and given the fact that you have a lot of market participants talking about domestic oriented counters or sectors that one needs to watch out for, given the fact that what is happening globally and the global turmoil. I want to get your view, Sandip. Are you also of that camp that it makes sense to actually look at the real estate space right now?
The real estate companies are not cheap. So if you remember last year, real estate stocks continued to do very well, even when the overall market did not do as well. So I think a lot of the positives already built into the prices. Although easing monetary policy tends to be beneficial for the real estate sector, but then we know that the sales velocity has slowed down on the residential side. On the commercial side, activity is okay. So I think that these companies need to go through a phase of consolidation before we can look at them. Longer term, demand trend should still be fine. But I think in the near term, a lot of the positives are in the price.
So Sandip, where else have you been adding positions or shopping afresh, if at all, in the market?
So I think among the large caps, the stocks which are still underappreciated, I would say, could be something like L&T or SBI, I think, which are not done as well in the up move. Because L&T fell because oil prices came off, so people thought the projects could get impacted. Plus, the IT subsidiaries might not do as well. SBI has, in general, underperformed the rest of the banking space. So I think in the large cap space, potentially I could think of these two which could catch up.
L&T as well as SBI. And Kunal, we've been chatting about that also, right? That L&T has really languished. And are you seeing signs of a recovery and a one-way move up with the rest of the market?
So it should happen. I think with time it should happen, because in none of the bull market trends, for the indices, L&T has been left behind. Maybe the start could have been a bit more late for the stock. With a, it enjoys a correlation of more than 75%, 77%, and in healthy market trends, the correlations have been as much as 85-90% for L&T with respect to the benchmark index, that's Nifty. So I think it's just a matter of time that the stock could make a comeback for itself. On the short-term charts, we're seeing ample support at 3,000, 3,200 mark for L&T. That's where the stock had tested multiple times in the last 1 to 2 months of this market correction. But then on the upside, I believe that even if the stock starts a minor rally, we could be looking at 3,500 to 3,600 as a potential target over the very near term for L&T.
We've got Akshay Bhagwat as well joining in on the show. But before that, let me get Sandip's view on pharma. Sandeep, a lot of back and forth on whether there are going to be tariffs slapped on Indian pharma or not. But what is your own sense on how pharma should be looked at, whether there are any positions that can be taken now?
I think the entire process of tariff imposition, how much tariffs will come, it's so like there's no way you can predict that. So that's the biggest problem which pharma could grapple with in the near term. So because given the fact that the generics are largely imported and domestic supplies are very, very limited in the US, and unlike any other product where let's say there's a car plant and you need to shift car manufacturing more in the US vis-a-vis other countries, it's easy to do. But for pharma, the approval processes, everything, that itself takes 3-4 years. So I think it's not so easy. The price impact will be felt by US consumers directly, but we don't know what the thinking process is. And I think that's the only reason pharma is underperforming. Otherwise, in the recent past, these companies, with the large pharma companies, the results have been good. The valuations are not very demanding.
All right, so that's the take coming on the pharma space. Kunal, let me get your closing trade ideas for our viewers.
So that will be one Kotak Bank. That's a chart which is starting to look attractive, especially with the fact that the stock is confirming a breakout yet again in line with how the banking stocks have behaved. So I think even at current levels of 2100 plus, looks attractive for a potential 3 to 5% swing upside.
Right. Akshay, you have any closing trade ideas for our viewers today?
Yeah. So I have two trades. First of all, good afternoon. Well, it is State Bank of India, which is noting a breakout of an inverse head and shoulder bullish pattern. That's a positional breakout and puts the chart on a very strong and firm footing, even as we head into the May month. So right now we are targeting momentum. 815 and 832 would be the two targets you can look forward to. 782 would be the stop loss. The second trade is Geo Financial, and I believe that this stock might be heading for 267 or 274 in the short-term scenario in the April month itself. 232 will be the stop loss on this trade.
Okay, some interesting idea there, and Geofinance, of course, is due to report its numbers as well. But look at Bharti. The fact that the stock has now hit all-time high or a record high, their market cap has crossed 11 trillion rupees as well for the first time, in its history. Bharti has really been that one leadership stock. It hasn't corrected too much in the market fall. In fact, I don't think it's corrected at all. It did fall to maybe about 1600 thereabouts, but it's on its way to really that 1900 odd level. Sandeep, what are your thoughts on Bharti and the kind of resilience and leadership the stock has shown?
So I've talked of Bharti several times in the past. So it's one of, because of its sheer performance, it's become the top holding in our large cap strategies. And the main story remains the same: strong cash flows, increased pricing power, which gives them the ability, and lower capex intensity, which gives them the ability to pay back debt fast. And as that happens, the equity valuations go up. So there is no reason to believe that anything is going to change in that. It's just that valuations at some stage would become prohibitive. So then the stock could go through a phase of consolidation.
Right, so that's the take coming in on Airtel, given the fact that one has hit a fresh record high levels. Also, you have a lot of brokerages giving thumbs up to Bharti Airtel. And yes, the theme of being actually domestic oriented also is playing well for that particular counter. But on that note, thank you so much, Sandeep, for joining us on the show. And we'll slip into a break on this edition of Closing Trades. When we come back, we'll chart the course for the market for the next half hour of trading session. Remember, it's truncated week, so it is the last trading day of the week.